Hi, this is Stock Investor Davis. Let's take a look at AIR, reviewing its 2024 quarter one, looking ahead to its full year projections, and closing with a technical analysis of the stock price. Please like and subscribe. Starting with its income statement, I highlighted the line items with noticeable differences in its year-over-year performance, which in AIR's case is nearly all accounts given its rapid growth. To summarize, we see its revenue nearly doubling compared to its first quarter last year from $10.6 million to $20.6 million. This increase successfully flowed through to its gross profit, going from $4.4 million up to almost $10 million, more than doubling. Finally, its net income, the second highlight from the bottom, going from nearly $600 million to more than, $600,000 to more than $4.6 million, nearly an 8 times more than last year's first quarter. This translates to its much greater earnings per share. Let's take a closer look at some of these figures. Digging deeper into its revenue and margins, we see the total revenue up 93% year over year, driven by its products, which contributes 94% of total revenue. Geographically, Asia sales have skyrocketed, up 146% year over year, and now make up 93% of total revenue, up from 73%, while the US sales pulled back from 2.8 million to 789,000, now making less than 4% of total revenue from 26% last year. Also worth noting, it had sales in Europe of 600,000, when last year it appears to have not entered that market yet. A third revenue breakout shows its contractors revenue gain exponential traction, going from less than 500,000 to over $11.2 million. Then going to the next level, gross margin, we see its gross margin has improved to 48.4% from 42%, an excellent improvement. Wrapping up the income statement, the one concern regarding its revenue is one customer made up 88% of its revenue. We'll touch on this item again when reviewing its guidance. Also, we highlighted some large changes in its expenses. Here we can see while both its research and development costs and its selling, general, and administrative costs went up about $1 million each, they both decreased in terms of percentage of revenue. Further, its research and development cost went up $500,000 due to a non-recurring charge, which lets us know we likely can expect a further improved operating margin in the next quarter. Moving to AIR's balance sheet, we have highlighted the more sizable changes. Starting with its current ratio, we see the company has nearly 5 times the amount of current assets as it has current liabilities. In fact, it has enough cash on hand to pay for all of its liabilities, current and non-current. It makes me wonder what the plan is with all of that money on hand. Additionally, the company sold nearly $18 million of short-term investments into cash equivalents. Some other notable line items include inventory increasing to over $31 million from about $24 million, deferred revenue increasing to $6.1 million from $2.8 million, and its accumulated other comprehensive loss increasing from a loss of $52 million to a loss of $47.6 million. Next, its cash flow statement. Carried over from the income statement, AIR has a much better starting point with the $4.6 million in net income, up from $589,000. Changes in its operating activities of note include less cash received from accounts receivable, more money spent on inventory, accrued expenses, and deferred revenue. Within its investing activities, the biggest change is the cash received from its short-term investments of $18 million. Looking ahead to its 2024 guidance, AIR is reiterating its guidance from its previous quarter, expecting $100 million in revenue, 50% growth year over year, and a $28 million in net income, a 90% growth year over year. Some items mentioned that help support this guidance include an order backlog of $24 million as of the end of its first quarter, which is more than they earned during the first quarter, which was $20.6 million. Additionally, the CEO states that historically its first quarter is its softest quarter and that revenue will grow by at least 50% and profit by over 90%, announcing a sixth customer for its silicon carbide wafer burn-in. Further, the US customer has indicated that as its production capacity increases, it intends to quickly move to Fox XP, one of AIR's burn-in systems, for higher volume productions. Now let's see what the analysts are showing. As of 10/25, the analysts are projecting a $1.04 for earnings per share for the full year and 19 cents for the next quarter. Both appear reasonable based on this current quarter's results. Looking at its revenue, the analysts are projecting $103.13 million, which is in line with management, which stated that they expect at least $100 million. It may be on the high side, but we'll need to see the results over time to confirm it. For now, it appears reasonable. Wrapping up with the technical analysis, AIR trading at $31. It's broken its uptrend that began in July 2022. Some short-term support and resistance points include $26 and $35. When factoring in the company's performance and growth potential, I like the price. Thank you for watching. Please like and subscribe.